In this example, we'll be doing practice exercise 13.3a that can be found in your textbook on page 608. We're going to be doing the journal entries needed to record a cash dividend. The exercise tells us that the declaration, record, and payment dates in connection with a cash dividend of $1,250,000 on a corporation's common stock are August 1st, October 15th, and November 14th. When they're talking about the declaration date, which is their August 1st date, that is when the board of directors declares a cash dividend. The date that the board of directors declares a cash dividend, it becomes legally binding for the company. The record date, or stockholder of record date, of October 15th tells us who will be receiving the dividend. If you are a common stockholder, as of the end of the day on October 15th, you will be participating in the dividend. And the payment date of November 14th is when the actual dividend will be paid to the stockholders. So our first entry is going to be on the declaration date, which is August 1st. With any dividend, whether it's cash or stock, there are always 3 important dates and 2 important journal entries. Again, the 3 important dates are the declaration date, the record date, and the payment date. So on August 1st, when we declare the dividend, it becomes legally binding that the company has to pay that dividend. So we need to record a liability. We're going to debit an account called cash dividends for the full $1,250,000. The cash dividends account reduces retained earnings of the business. Remember, retained earnings is how much earnings the company has retained or kept in their business. And in this case, we are giving some of that earnings away. We're giving it back to the shareholders. So it's reducing those retained earnings. And it's debited because retained earnings is an equity account, and to increase it, we would credit it. And we are going to credit cash dividends payable because it is a liability. We are not paying it on the declaration date. We are just declaring that one will be paid. On the record date, which they tell us is October 15th, there is no entry required. This date again is just telling us, the company, who will be receiving the dividend. And on the payment date of November 14th is when we're actually going to pay the dividend. So we have to eliminate our liability for the $1,250,000, and we have to pay out cash because it is a cash dividend in total of $1,250,000 to our common shareholders.